Hey everyone, happy December. We've made it through most of 2024 and we're still alive. The sun still comes up every morning. That's great news. But what about real estate in Las Vegas? Is it great news as well? Well, let's go ahead and find out. First, let me introduce myself. I am Justin Miller, co-founder and principal at the Chong Miller Group. At the Chong Miller Group, we help people build wealth through real estate. We help people buy and sell homes, whether primary homes, vacation homes, investment properties. We help you here in the Las Vegas Valley. Okay, so this is the December 2024 real estate market update, specifically single-family resale residential in the Las Vegas Valley. Every month I produce this, and most every month a companion multifamily, which is condos and townhome resales here in the Valley. This is the single-family edition. The data are pulled on the 7th of each month, and so the data were pulled on the 7th of December for this update. That gives us the most complete version of the data set that we have timely access to, and the data are from the month of November. Most of the data are from the multiple listing service. There are supplements to that with regard to some of the data as well. And so we're looking backwards at what happened in November of 2024 in this video, as well as being able to make some projections for the current month for December. And so with that little introductory note, let's go ahead and dive right in. As I do every month, I talk about pricing first. So what happened with pricing in November of 2024? Well, as I alluded to in the last video, I expected pricing to remain approximately flat. There was a possibility with fewer transactions, and we'll look at whether or not there were fewer transactions, that we could see movement up or down just because of an inherent small number challenge that happens, especially around this time of year. The fewer the transactions, the bigger the impact of each transaction on the other statistics. And so what do we actually see here in November of 2024? We were flat, again, at $470,000. Now, interestingly, this means we've had 5 months in 2024 where the median resale sold price was $470,000 on single-family homes in the Las Vegas Valley. That seems in some manner to be really stable. We had started the year lower, we came up, hit 470, we actually then spiked to 480 one month, we've come back down to 470, and we've been flat at that number for 4 months. So we've been at 470 for a total of 5 months so far in 2024. Some people may say, well, that seems kind of strange that we've been that flat for a while. I'd point you back to 2019. 2019, we were median sold price for single family resales just about 300,000 almost the entire year. We had gone slightly above, slightly below, but we were 300,000 plus or minus about 1% for much of the year. In fact, also in 2018. And by the way, yes, 2019, looking at around $300,000, we are $470,000 here close to the end of 2024. That means in 5 years, we've actually come up $170,000 on median sold price here in the Las Vegas Valley. It's a pretty impressive growth over a period of time. Now, of course, we were not at 470 at the beginning of this year or at the end of November of 2023. So we are up 6.2% from the 442,667 median sold price that we had seen end of November of 23, and we were up 7.6% from the starting price in 2024. So we are still sitting at above average rate of growth for prices in 2024, even though we happen to have been stable at clearly this higher price point, 7.6% above the beginning of the year. throughout 2024. So that's actually really good news with regard to pricing, especially if you're an owner or you're wanting to be buying into properties that have further room for growth higher. Okay, now I look at pricing in one other manner, and that is price per foot. And I do that because it gives us some interesting information on the internals of the market, right? Price is just, it's the middle price. It is half of all transactions are above, half of all transactions are below, but it doesn't tell us anything about the distribution of prices within the marketplace. So price per foot does give us some hints about that. Median price per foot, $256 per foot at the end of November of 2024. That's actually down. It's down 1.2% from $259. It's down $3 a foot at the median for sold properties in Las Vegas in November of 2024. Now, when price per foot goes up at a greater rate than the median sold price, that's telling us that those properties that are above median are doing better, that there's more of those properties transacting than those below median. Here, because price per foot actually came down $3 a foot, that means actually the upper portion of the market has been more constrained than what we've seen in the lower portion of the market. This has actually been true for most of 2024. We had seen some stabilization the past couple of months where both upper and lower portions of the market were behaving approximately similarly. Well, clearly in November, the upper portion of the market slowed relative to the entirety of the market and the lower portion of the market. Now, that's actually confirming that we're seeing lower numbers of transactions, slower transaction activity in the upper end. And in fact, more detailed analysis actually shows that the most constrained part of the market right now, and actually for the past few months, has been sort of the $1 to $3 million price points. Above that, the market's pretty resilient. There's definitely activity that's taking place, and people buying at that end, selling at that end of the market are considerably less sensitive to either macro conditions or to interest rates specifically and alternative potential investments specifically. But in that $1 to $3 million price strata, we're seeing slower activity, and it's noticeably slower activity than what we would see in a completely normally functioning market. And so that's been a feature of 2024, and definitely a pronounced feature in November of 2024. So very stable in pricing, but we're seeing evidence of differential impacts of transaction volume predicated, at least in part, on interest rates in the upper end of the market, specifically in the $1 to $3 million price point. Okay, so with that said, with that price number telling us where we are in the marketplace with regard to some kind of equilibrium for price, we can start to look at the demand numbers, we can start to look at the supply numbers, and they'll be meaningful. So remember, for both demand and for supply, I look at two different measures of each of those sides of the market, so that we have confirmation that we're not just looking at some aberrant piece of data. So the two demand measures I look at are the number of units that sold and the number of units that have gone into contract or become pending sales. Okay, so with regard to sold, we had 1,427 single-family resales that closed in the month of November. Now, this is down substantially. It's down 15.9% from the 1,693 that closed in October of 2024. Now, I had been saying that even though October's pending numbers had been higher than the October sold numbers, and that would point to maybe a better November, that seasonal factors were likely to overwhelm that a particular statistic from the prior month, and so that we were likely to see sales volume actually come down, and we actually did. But we're down substantially. We're down substantially at 15.9% down. And that's in a market where we've already had very low transaction volume here in the Las Vegas Valley, but actually across the country as well. 2024 has been tracking very, very close to 2023, which had been the slowest year in a generation. So 2024 is going to come in as a very low transaction volume year. Anyhow, that does suggest very strong seasonal influence hit the market in November, as we would expect every November. This decrease percentage-wise, though, is a little bit striking. It's a little more than we might have expected, especially in an already very slow year. Okay, we are up actually year over year. November of 2023, we had 1,270 closed. We're 157 more than what we had in November of 2023. Remember, though, again, November, all of 2023, we were the lowest transaction volume that we'd seen in literally in a generation. And so that we're up relative to 2023, great news, but that's up relative to, very little. Okay, the other demand measure, pending contracts. How many buyers and sellers entered into a contract that have not yet closed, but are scheduled to close more likely in the month of December. And so this is kind of a forward-pointing measure where we're seeing an indication of what we might be able to expect for December. All right, there were 1,517 pending contracts written. And I will just point out that's above the 1,427 that sold, that closed in November. So that suggests we could see an uptick in closed activity in December, although it'd be counter-cyclical. That is down, it's down 5.8% from the 1,610 that we saw pending at the end of November, at the end of October of 2024. And it's up 9.5% from the 1,385 that we saw pending at the end of November of 2023. So that's good. It suggests maybe a little bit of strength in the market, which is kind of interesting. But again, I think our seasonal factors are going to overwhelm this increase in pending contracts. That might mean that some of these pending contracts push out to January and they become good for the month of January as opposed to closing in December. It might mean that there's actually going to be a higher number of failed contracts in December than what certainly higher than what we'd like to see, higher than what we might otherwise be looking at. Now, there's one lending piece of information I want to throw in here, which is kind of interesting. Across the U.S., this is from the Mortgage Bankers Association, across the U.S., mortgage application activity was up 5.4% last week. So if you will, that's the end of November. But we have to take that with a grain of salt. One, it's a national statistic. It's not the Las Vegas statistic. But two is the numbers get broken down further. We get some insight into what actually was taking place. The 30-year fixed rate loan mortgage rate came down from 6.69% the week prior to 6.67. So 2 basis points, it's pretty meaningless. It really does not change more than $1 or $2 the monthly payment. But this was relative to what was going on to about a year ago, where interest rates were over 7.25% at this time last year. And so what we actually saw was the purchase index. That's the breakout specifically for purchase mortgages as opposed to refinance mortgages. Last week, that actually came down to 154.9. That's just an index number. It doesn't mean anything except relative to other items on that same index. The prior week, the purchase index was at 161.5. That means that index actually fell for purchases, by over 5.5 points. So interesting, the headline number from MBA was that mortgage activity picked up, but actually it's all on the refinance side. So on the refinance side, the refinance index increased from 213.9 to 225.5. So you can see there was significant refinance activity that was applied for in the last week of November. We've actually seen this through a significant portion of the month of November where we saw mortgage activity increasing, but much of it was actually not purchase related, it was refinance related. Okay, so that's kind of interesting. It means that interest rates continue to be very much in the high sixes through most of 2024. We've seen interest rates fluctuating plus or minus 3%, 0.3% around 7. So it's 7.3 down to 6.7%. With the middle of September and the couple of weeks on each side, around the middle of September, we saw substantially lower mortgage interest rates for 30-year fixed rate mortgages. We saw rates come down to about 6.26%, and they had come down over a 3-week period of time and went back up over a 3-week period of time. And here we are back in the high sixes. And this is likely to continue for quite a while. So that interest rate activity is not really helping the market at all, except to say that maybe interest rates are stable, where last year, much of the year, interest rates were increasing in 2023. They've been pretty stable in 2024. So that's clearly influencing closed contracts, clearly influencing pending contracts. I make the comment about interest rates with regard to pending because there's no great reason to believe, even despite headlines, that mortgage application activity was higher in the last week of November. There's no great reason to believe that that's actually going to be increasing closed transactions in December. I think we will continue to see the seasonal impact of the November-December timeframe continue to push things down. So I think that preparing yourself for December's numbers, we should expect to see lower demand numbers with both pieces of the demand side of the market. Okay, so that's demand. What about supply? Supply for sale units that's sitting in inventory at the end of November, 5,646. That's down. As we've seen much of the year, inventory is actually still continuing to come down. That's down 6.4% from 6,030 that we had sitting in market at the end of October. There's very weak supply. It's half of normal supply, sitting at this basically 5,650 type of number, or half of the normal inventory that we'd expect to see, including adjusted for seasonality. We are up from the incredibly low inventory that we had last year, so that's great. We're up from 5,089 by about 550 units for sale, single-family resale homes, relative to last year. But remember, last year, all of the numbers stunningly weak. So now, the last couple of months, I pointed out a particular piece of information with regard to inventory. The houses sitting in market with the for sale sign on them waiting to be sold. And that is, there's a real strong disconnect between listings and what actually is selling in the market. So looking at the numbers for November, we saw the median list price was $550,000 for resale single family homes. That's $80,000 higher than the median sold price of $470,000. Now, that's actually an improvement from the past 2 months where we'd actually been $100,000 high and then about $90,000 high. So the median list price is coming down, which is great, but it's still $80,000 too high. That means about 16% higher than the median sold price. So that's a pretty big disconnect in the marketplace. If we normalize median list price to equal median sold price, we actually only have 3,184 units that are sitting in inventory that are priced correctly. Now there could be some real junk that's just at low prices, so it's not priced correctly. It might be that should be lower. It could be that there is a lot of really great stuff sitting in the market. It's priced appropriately at a much higher price, but that part of the market's not selling particularly well at the moment, that $1 to $3 million price point. But at the median, if we normalize median list at $470,000, that means we've got only 3,184 properties sitting in inventory, because we've taken out those that are priced ridiculously. Well, that's less than 30% of normal inventory in the marketplace. Again, just an indication that we're really sitting at very low qualifiable inventory here in the market. And I'll just give you an example of how some of these things are going. I have a client who was moving here, was looking at a property, really liked the property. Property's overpriced. We put in a very strong, very reasonable offer. And the seller and listing agent came back and said, nope, we'll only sell at full price, and we want you to close 2 weeks earlier than you were wanting to close, and we're not doing this and we're not doing that, and et cetera, et cetera. And so my client went and bought another property instead of the one that they first had identified. So they really liked this other property. They went into contract on it. They've closed recently on the contract on that new property. And the one they had first put the offer on, the listing agent and seller decided to recognize market forces, and they lowered the price by $100, which still leaves them ridiculously high. And they're still sitting there on market in inventory, not selling, right? So sellers, listing agents who are advising sellers can be making really big mistakes. And it seems as though a significant portion of sellers and listing agents are not pricing appropriately for this market. If we've got a $550,000 median list price missing by $80,000 relative to the median sold price, there's a lot of lack of understanding among sellers about the market, and that means a lot of lack of education by listing agents to their seller clients about what the market actually is and what their homes are actually worth. Okay. Now, just like with demand, I look at two different supply numbers, and so that was standing inventory. The other supply number that I look at is new listings. This is the number of newly listed properties for sale that came into the market during the month of November. So we've got those that were sitting there at the end of November, but we also have ones that came in during the month. That number, new listings, 2,080. That is down a very large 26.1% from the 2,815 that had come into the market in the month of October. It is up again 10.8% over what we saw in November of 2023. Keeping in mind, of course, all of 2023 very weak, and the seasonal influences in 2023 were extremely strong because we're still looking at interest rates well over 7% as we were going through November of last year. So what does this mean? It means that inventory is down. It means that actually both measures of supply are down. It also means that both measures of demand are down. And we know that interest rates are approximately flat. So very impressive, actually, that pricing at the median sold remains flat from the prior 3 months, 4 in a row, plus one other month in 2024 at $470,000. Now, there's one other statistic real quickly, and that is the back on market. This number had improved a little bit the prior month, but this number in November, 603. So that means escrows have failed for whatever the various reasons are, and make sure if you're talking to a real estate agent, they can explain to you exactly what's driving back on market. These are failures of purchase contracts. They hurt buyers, they hurt sellers. There's a significant number of issues that are impacting contracts that are causing these failures. At the end of the day, because contract failures hurt everybody, this is in some manner a failure of the real estate agent, so seller's agent and the buyer's agent, to be able to talk through the issues and get buyer and seller to a place where there can be agreement to salvage deals that otherwise are at risk. Now, some deals can never be salvaged for a variety of reasons, but these numbers are really high. We're at 29.7% failed contracts, virtually 30%. This is more than 3 times normal. This is just really bad, and this has been the case for the past 4 years. There's a real problem in the marketplace where this is occurring. So, okay. If you like this kind of information, please smash the like button, hit the notification bell, subscribe if you haven't. Please, even more, share this video and this kind of information with your friends, your neighbors, your family, your colleagues, anyone you think might benefit from having a real understanding of what actually is taking place in the market. So I put these videos together every month to educate my clients and to educate the larger public who's interested in this, as well as those real estate agents who are following me, what's really taking place in the market, because there's a bunch of noise out there, a bunch of people who have no idea what they're talking about, just saying things for various reasons. This, though, is the accurate information. This is what's taking place. I am Justin Miller, principal and co-founder of the Chong Miller Group. At the Chong Miller Group, we help people build wealth through real estate. And as an example of that, let me just ask you, what would your wealth profile look like if you owned a home that you bought in 2019 for a median price of $300,000, and you're sitting near the end of 2024 in that same home with a median price of $470,000? Well, your net worth has changed. It's changed in a good way. You've improved your lot in life. Okay, real good. That's it. I'll see you in the next video. Thank you.